Good morning, everybody. All right. Yesterday we looked at gold, was setting up. Today it's moving. I'm going to point that out early. That could be bought. Let's look at the gold futures. And you can see they're gapping up a little bit here, but it's a nice retest pattern after the breakout with multiple days of consolidating and starting to move up there. So that looks great. And silver lagging a little bit, not as clean a pattern, but looks good. Good. Looks like it should follow. Now, Bitcoin's down again. There's a lot of these patterns that have been beaten down like this, not just related to Bitcoin, but there's many patterns that look similar to this, that are close to some support, and they look like they could follow through after yesterday, but clearly they're not. So far, it's just an inside day. We looked at the weekly chart, and wouldn't be a bad thing for it to go down there to the whole number, maybe a little bit below. So we'll see if that is going to happen. I'd keep an eye on this. And like stocks related to it, the main one is MSTR, which has been in a very controlled downtrend. And we define controlled as green bars, not following through to the upside or very little, ranges being relatively close in size. Well, the ranges over the last couple of days have narrowed, so the momentum is slowing. And this is maybe has to come down here on the weekly time frame. You got $150 in the middle of that, I guess, trading range, pivot highs and pivot lows. I would definitely keep an eye on these because like these Bitcoin people, they're like a cult. And over the course of many years, they've been right. I mean, those that can sit through these horrendous pullbacks like this, well, in the end, they've been proven right. So we'll see what this does. And my point being, they're going to come back. Right? So those that are, you know, Bitcoin lovers and believe it's going to go to the moon, uh, at some point, they're going to pile into this. So keep an eye on that. ETH, Ethereum, similarly. This is down a little bit, gapping down a little. So maybe that comes down. You want to keep an eye on that. And interesting, you know, last week we were talking about watch these interest rates here, the 10-year. If they break out above this area, um, that would put more pressure on the broader markets. Well, clearly that didn't happen. So there was these concerns of the Fed, they're not going to lower interest rates then in December, then thinking they are. We don't know what they're going to do. Nobody does. Somebody does, I'm sure. But, the 10 years moving down here to this support area. And so that's going to help the market. And with, the Thanksgiving holiday, the markets are just not, I don't think they're going to pull back very much. But if they're going to consolidate or pull back, I think today's the day that they'll do that since they're up against some significant resistance areas. But again, this is moving down. So that's a plus to a certain extent. We don't want to see it moving down too much. We don't want to see it collapsing. That would be a bad sign. And the 13-week that we use as a guide to what the Fed's going to do. Yeah, Roberts, and we talked about yesterday. You had mentioned the Fed tool. We talked about that yesterday pre-market. And so here was where the concerns began as, this was like, yes, 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 they're going to cut in December. And I was like, okay, so a little bit of retracement, not a big deal. But as it hung up here, this is where the concerns began. that they're not, and now we see it inching down. And I guess that Fed tool defines the criteria that they use, but this is a simple way to see, even on a short-term basis, what the Fed is likely to do. And over the years, we've used this, back, I guess it was, I think it was like, was it 2022? Right? Right over here. I'm scrolling here on the weekly time frame. And so at that time, we told subscribers, of the advisory letter that, hey, this is bad, that this is starting to break out and the market is likely to suffer some damages. And, that was, you know, over here, it wasn't in retrospect. This was real time, but here you can see in retrospect how severe it was. So, as I said, on a short term and intermediate term basis, this is a great piece of information that's available to everyone through your charting package. All right, let's see what's going on. Oh, so things that are beaten down, like software, this was one of the reasons to think that the market could correct, because this was leading the way down. And so now it's extended. It's below the 200. Clearly, it's below the 50, which is declining. But we always look for stocks that are beaten down on a short-term basis that we could, trade short-term. So this is in the middle of nowhere. That doesn't mean it can't start to rebuild. So here's one of the things I think most traders struggle with. I know I did. Is that you look for something, a breakdown like this that's just pretty severe, and you see, wait, and the concept of looking to the left, which was a huge light bulb moment for myself and what I've shared with others. Now it's in this unfilled gap. I'm looking at the weekly chart here. But that's like no support compared to this top. And the implications is, that it will go lower. Well, that may be in the cards. And if that's to happen, that doesn't bode well for the NASDAQ 100 or anything else. If software is getting beat up like that, and you can just take a look at many, including Microsoft, and what's happened. But if the daily chart can form a pivot and then retest that, those are the kind of patterns where the turn begins. And in part of what this week's chart of the week was about, which I mentioned yesterday, go take a read of that. So things can start to rebuild and you start to get the turn from red to green, which begins on a smaller time frame. So there's a lot of stocks that are beaten down like that. Um, you know, Now this is beaten down. It's not a software, but you get what I mean. It's just extended to the downside, and maybe because of a bullish market environment, it perks up. It's not perking up this morning. It's moving back down again. It's not the no-brainer kind of a setup, but there's lots of stocks or ETFs that are beaten down like this that may eventually flip back up for short-term trades. Yeah, internet. So that popped up quite a bit. This was Meta did well yesterday, and a few others that I mentioned with the FANGs pre-market yesterday. So some of them were starting to move higher. All right, broader markets. They're coming up. Can they get all the way back up to this resistance area, the top there? That's stalled at the 50 MA. And one of the things to look at, which what I was thinking pre-market as this was going sideways and looking at the smaller time frames, was that would there be some type of a breakout failure this morning where on a short-term basis, maybe a day trade, shorting these ETFs, leverage ETFs or futures, that would come down a bit. I suspect that there's going to be buyers because of the holiday, but this is broken down. It rolled over. It moved momentarily under the 1010, right? The October 10th down day, and now it's bounced up. Well, I think there's a likelihood that on a short-term basis, the bounce is about done. Since it's at the 50, it came a long way from the low. So we'll see if this breaks. IWM was the strongest yesterday. You see it's still up here today, trying to move up toward the declining 20, but that came up quite a bit and cleared the top of the big down day. This is in a downtrend. Short term, it's moving up toward resistance, and it's in an area where sellers should begin to show up, but there's no sign of any real weakness here, even pre-market. Uh, but if it moves under this pre-market low, comes back down there, that's going to open up the door to moving lower. I'll be keeping an eye on that. Diamonds been the weaker, but it doesn't have the void. It doesn't have that void. So, and there's, without the pre-market data, it just doesn't look that attractive compared to the others that are extended. And you might think, well, why do the ones that are stronger? Because those are the ones that have the void, a lack of any significant support below. So, that's gone sideways. We go back and look at the Qs here, and you can see what I mean by that. It trended higher, and it made, higher highs and higher lows. It never violated a prior low yesterday, but now it's got all of these pivot lows clustered here. So a move under there would open up the door on a short-term basis to some kind of retracement. The spiders, similarly, right? And you see there was a little rejection there at the end of the day yesterday. Let's see where they're at here. There's the rejection. And so this could pull back a bit. See how far. Might want to keep an eye on financials. You see what they do. They underperformed, but if the S&Ps are going to move down, maybe the financials would weaken. So far this morning, they look okay, like they could actually go higher, that they underperformed. And let's go back to spiders. And they're basically unchanged right at the top of that bar. Good morning, Valley. Right at the top of the bar there. And so that leads us to SPX. Double check those numbers. After yesterday, they came up. So surprisingly, right, after yesterday's bar, I'm surprised that the call strike didn't come up even more, which could be a good thing. Meaning, what it communicates to me is that while you had a bullish couple of days, they're not, the option traders aren't acting stupidly. Meaning they're not buying call strikes way above, like if it was if the extreme premium was up above 6,800, I would be thinking, there's the idiots again pushing it to crazy levels that are highly unlikely to be moved to. But while this has moved up a bit from yesterday, it's not crazy. And the put strike came up as it should. Now things are unchanged. I think even though I think it's possible, maybe probable, that the markets have a consolidation day and pull back a bit, I think it's highly unlikely they're going to go down below yesterday's low. So while this is the extreme, I would think that credit spreads on any kind of pullback where the premium increases below yesterday's low would make sense. And if they do start to move down, call strikes up around 67.50-ish or a little above would make sense also. Oil, which we always look at, is not doing much of anything. It's down a little bit. Interest rates are down a little bit. So fewer inflation concerns. That always raises the question about the economy slowing, which I don't care what the government says. There's no doubt that it is. So AI, while it's the future, it's destroying jobs and people are hurting. So we'll see where that all ends up in the future. Other than that, we'll be looking at individual stocks today to see um, where they're going. But, last thing before I turn it over to Dan, uh, semiconductors, they look like they're rolling over a bit. So one of the things to consider for day trades is SOXL, which is the leveraged um, semiconductors. This looks like it's moving down. And in addition, NVIDIA is coming down all the way down here to test this low. So this raises the question, look, if NVIDIA, the 800-pound gorilla of institutional stocks is going to start breaking down. And if you look at AMD, that's lower this morning. So if this sector, really starts to weaken, that could be a fly in the ointment of the seasonality bullish scenario of Thanksgiving holiday holding the markets up. But, we'll see how it unfolds. All yours, Dan.
Hi, good morning. Yeah, I actually am surprised the Qs are holding up so well with the NVIDIA news. Let's take a look at some of those semis. And as we know, today's Tuesday, it's Thursday, day off, Friday. Equity markets close at 1. Let's get them. So the news was Meta. No, not Meta, Google. Was it Meta or Google? Google, I think, yeah. Yeah, because I think that's what got it excited yesterday also, that they might be buying some chips from Google instead of NVIDIA. And so whenever we trade news, you ask yourself, well, who's going to benefit? Who's going to get hurt? Well, NVIDIA, obviously, because they were the 110-pound gorilla. So if you got some competitors lurching in their playground to take away business, then they're going to get hurt. And do you remember yesterday, I remember saying the video in the morning was relative weakness, even though the SMHs were up. And, that's probably same news they're sniffing around. But I noticed AMD is down. Not much. AMD, MU. Avgo was up. So you have to ask yourselves, we don't know for sure this is the only reason it's up, but I'm assuming that news of them sniffing around is helping Avgo also, but no pattern there. Alarms. Sam's Lulu alarm went off. Let me just reset it higher now, 172. Well, that's a great idea. I think we looked and there was no juice, but weekly, monthly could be in a great spot also for a sustainable bounce. We'll see. Epsilon retest of this buy setup looks good. Wish we got into it yesterday though. Would have been a better entry. We're chasing a little, but this also looks like Alex. Looks like your Berkshire retest of a buy setup. So that's one I like too. Easy end. It's in the weekend letter. It's gapping up over the entry. It's an ADR. GDX we're in. Greg mentioned gold. Yep. Nice small closing breakout. Flat 20, rising 15. Looks good. Those are all the alarms. Call triggered yesterday. Buy seven. AMW I'm watching. Oh, we actually bought calls on the D-Dog is the one I'm watching here for Flymo, kind of deep buy setup at the 50. I got an alarm on that. Let's go to earnings. I deleted a couple already. Yeah, yeah, you mentioned yesterday. Yeah, it's on my list. Wish it didn't have Thursday's tail, but I like it. It's constructive. I'll set an alarm 1522. I know his cousin Neo reported blank gapping up, but no pattern. Zoom 8290 bullish gap in the middle. So this could be a condor setup. Fell out of my call spread, out of my put spread. Provided after 30 minutes, it's still kind of just bobbling in the middle. That is $70. Wow, that's a big gap. I'd be selling if I were long, but I don't see any news setup. Agilent's been strong, 151. Let's see. Let's see what it looks like if it recovers. I have a bullish bias. Keys 200. Now that's a wow, is that all-time highs? Yeah. Well, you got to look to the left here, but looks like all-time highs on keys. So that's bullish. But maybe a 30-minute low call spread because the gap's so big. WWD, I see one print up here at 280. If so, you got to watch a pullback. But look how wide and overlapping loopy these bars are. $6. Bearish gap. But trades. Look at this. Snacks, $88. Gapping on the high end of the range. So bullish gap could be the start of a bottoming pattern. Santa 30. I don't see any prints up here, but if it is opening here under 30, then that's a nice gap. Gapping right to the top of the range, and you have a void. So I have it here in the middle chart, Santa. But when I don't see volume, then you just can't trust it. I would love for this to have a pre-market gap and going sideways here at 29.50 for an hour and a half into the open. Then I would say buy 5-minute high. Those are the type of gaps that I would be aggressive on, but I need a pre-market pattern confirming the pattern and the bullishness. put spread maybe. This could be a little downside shakeout. ADI, it's extended. Pearl, we got a couple retailers, 260. That's bearish gap. Wow. Call spread if there's any juice, but I doubt it. DKS 199, bearish gap, call spread. Has room to fall in the weekly. So that I like, call spread. BBY, no pattern. There's your little Neo. So Neo's was up, down. No interest. KSF. That's a monster gap. Monster gap. Got nothing. ANF. That's a pro gap. Look at this power downtrend, closing breakdown on volume into earnings. And you're gapping up over all these pivots. That's a pro gap. But as you know, pro gap doesn't mean buy it. The gap's too big for me. I actually did a condor on this where I sold the $2 wide, $80 call spread. Let's see. AMF, I did the, how far away? 56 put spread. So I got $21 of, so I'm just going to let the put spread expire. Worthless. Yeah, there's a 90% chance I have a gain unless it rips up at the open. So I'll be looking to close the call spread. Let me get it loaded up here. I got the 80, 82. But for a new trade, I don't see anything. Need to pull back. Pony, there's so many. Greg showed you a couple of them. So many of these things that are down a lot. And it was just a matter of finding the ones that were making a turn that we could rely on. But some had earnings, of course, helping the turn. I'm almost done here. No pattern, 810. That's a bearish gap, BNBC. And the last one, that's a bearish gap, but too extended. Those are all the earnings. Gap alarm. Gap alarm. That could be a 30-minute high if it holds up here. Yeah, circle. Yeah, I reset the alarm. For a climber. That's sent a middle chart. Yeah, gap's too big now. Shoot. I was hoping they would open under $30. And the bullish gap, man. Yeah, well, but yeah, the options are not even open yet. The jerk. They're still showing yesterday's closing prices. So Q's the weakest here. Banks look good for a continued bounce. The military bouncing on the 15, IYT bouncing on the 15. That's not a bad pattern right there. Greg, this is it went down and it went up. 1, 2, 3. That's a 5-bar reversal with a void. Transports, that's a nice bottom. It's kind of like a mini Head and Shoulders. If you were to look at an hourly, look at these 2 bars there, and then yesterday's bar. I bet that's a hourly Head and Shoulder breakout. And the diamonds are ripping. Nice 15. IWM is nice 15, slow and controlled. So I still have a bullish bias here. Qs are weak, I'm sure, because of the NVIDIA, those semis we talked about. NVIDIA looks horrible. If it were to close here, you just short the low tomorrow for a day trade. Guggenheimer's giving up his gap. So that might be a sell the news for a fall spread. It's already down $10 from pre-market high. Man, this stupid ANF is still not open.